Alrighty, the market sure is getting interesting. We got some hot and heavy selling, and I'm here to help you navigate it. So I'm going to be going over SPY and a few updates. And on Wednesday, it's FOMC day. It's going to be very important. Be sure to tune in to Weenie Trades Live. Romulus is going to be coming on stream, and he's going to be sharing his thoughts on what might happen at the FOMC meeting. You're definitely not going to want to miss it. Go ahead and subscribe to Backpack Trader. But first up we got is the SPY, and the SPY is really accelerating its trend to the downside. Notice how we have lower highs and lower lows, and the lower lows are starting to crater towards the downside. So if SPY is really selling off even further, we could have a liquidation break to the downside. So as it goes right now, as long as the SPY is above 370 but beneath 380, a lot of chop is likely going to occur. If we get above 380, we could potentially test something as high as 400, but that is the less likely scenario. What could happen this week is I'm eyeing up something like 360 and potentially even a little bit lower down to this 353 to 355 zone. And right over here we have the RSI just dipping into weekly oversold. However, do we have a divergence right here? If RSI can make a higher low, then this could be the end of the sell-off. However, we'll have to reevaluate that at Weenie Trades Live. Intraday, though, there's a nice good RSI divergence to catch a nice good bounce. Do you see it? RSI makes a equal low while SPY makes lower lows. Eventually, SPY makes one big lower low and the RSI makes a higher low. So do you see this? SPY making lower lows, RSI makes a higher low. And shout out to Andrew Ditter over here. Andrew Ditter catching the SPY bounce for a nice good rocket ride. RSI making a higher low, SPY making a lower low. That hints towards a trend reversal. That's called a bullish divergence. I'm using a lot of my CMT terms as I just finished the CMT level 1 exam on Sunday. It was a lot of fun. So SPY kind of just choppy until FOMC. Stay very, very, very patient. Next up we got is the VIX, the Volatility and Fear Index. This is going to give us a hint as to whether the SPY really breaks down or if we chop. If you guys watched that last game plan video, boom, nice good dip into 23, 24, boom, into a bounce. And now we're contesting with these highs of about 35, 22. Are we going to break out on the VIX? Time will tell, but if it does, if the VIX is starting to come above 35, 60, the selling could really get intense on the SPY, and then we could be looking at even lower targets like that 340 level. So stay vigilant. This is not the time to be risking lots of money. The market is screaming at us to be very, very cautious. So now I'm going to break down a few tickers from members that showed up live. Shout out to Diesel over here. And we have XOM coming up first. So oil and gas companies doing very well. This is the first pullback. I would wait for a little bit deeper of a pullback before considering entering a buy position. Again, none of this is a recommendation to buy or sell any security though. I'm literally just analyzing the chart and looking where support areas that might hold. So right over here, 89. Seems to be interesting on XOM. Expected move into the end of the week, $4.50. So we could see it maybe just above 90, and we could maybe see it as high as 100, but not expected to go much higher than 100. And that's a gap full of resistance up there as well. So XOM, I would say it's more likely to see something like 89 than it is to see something as high as 100. So we can check out something like /CL to look at this. /CL just climbing into a tight rising wedge. It could be a bearish pattern, but really oil, the trends tend to continue. We got a nice good higher low, higher low, higher low, higher low, and now the trend is starting to accelerate. Once it starts to pinch, it's either going to break down to the downside, or it's going to break up and break through the divergence and break out to the upside. So keep an eye out on oil if you're watching something like XOM. Next up we got is Disney, and Obi-Wan Kenobi not saving Disney. So Obi-Wan Kenobi not really saving Disney stock, and you know this stock might be headed for quite lower prices, maybe something like 64, 63. I'm bearish Disney, however, it doesn't mean you just take a short position on Disney. It could chop around, it could really just go sideways to slightly higher. So Disney, not a big fan of it. We do have an RSI divergence. Notice this, RSI making a higher low, Disney stock making lower lows. We'll see if Disney blows through that divergence. If it's selling off again, that would confirm actually more trend to the downside if we continue to sell off. If we bounce, it could lead to a little bit more of a short-term reversal. However, I wouldn't expect it to go much higher than 107.70. Disney, not financial advice, but I don't think it's that good of an investment, at least not until it really starts to ring out a lot of buyers. So Obi-Wan Kenobi, you got to use the Force a little bit stronger. Next up we got is Meta, and Meta getting absolutely destroyed, down 6.44%. And if you're subscribed to Backpack Trader, Romulus was telling us before it sells off, hey, Facebook probably going to go back to the lows. In fact, he said it will go back to the lows. A warning. So go check out that video. I think that it needs to be appreciated just a little bit more, because there was some really good droppage in Facebook. So Facebook, I wouldn't be surprised if it contests with this low in maybe like a week or so. Now, if we do get that capitulation style selling in the market, I would expect a potential bounce, a nice good V bounce. If there's high volume, we see a 90% down day, that could be our catalyst to get a nice, good rally. And that's where we can actually start buying stocks again, or at least when I'm going to start buying stocks again. It was a great day trading today because we're short. And right over there, so that's Meta. I basically would look for much lower prices. Maybe 93.62 seems to be a healthy area. And that's just a retracement from all the way back in 2012. So 2012, Facebook goes from 17 up to 380. And that would be a 78.6% retracement. Just some Fibonacci levels to throw out there as targets, because there's going to be a lot of stop orders underneath 137, a lot of stop orders underneath 123. Sometimes the market just likes to hunt those stop orders. Next up we got is Costco, COST. And Costco, down on the day, but not as bad as the rest of the market. So a little bit of relative strength. We're just kind of chopping and flopping all around. It looks like we hit resistance to a T, pulled back, put in a lower high, tried to hold on Friday. Today we gapped down, pushed up, and actually closed a lot stronger than most stocks on a little bit more volume. So Costco does have a little bit of relative strength compared to the rest of the market. It's certainly a lot stronger than TGT, Target, because Target is just, it's not passing on its costs to the consumer. Target, big breakdown. Yeah, Target may be headed back to sub 100 on TGT. So if the whole market's selling off, Costco is going to get clapped as well. But I do like it as a relative strength play if you are going to go long, which again is very dangerous until we see some very good trend changes. So that's my recap for today's video. That is also, we did the another Apex challenge. Here's the results for that today. Nice good trading, caught a nice good morning short, stopped out at the high wick, but then was able to reload and do pretty well. It's pretty cool. It shows the win percentage, lose percentage. I'll be doing more Apex futures trading updates. I'm still building my edge as a futures trader, just kind of getting into the flow, figuring out different strategies. And what's super cool about this is what's really important to note about the Apex Trader Challenge is if you leave any open orders, your account challenge fails. If you go beneath your trailing threshold, your account challenge fails. What is cool about the Apex challenge, though, is that your first $10,000, you get to keep all the profits. The first 10K is all yours, and then it's just a 90-10 profit split. You get to keep 90%, they get 10% of your profits thereafter. So not too bad of a gig. I'll have a link in the description if you're interested. Be sure to ask lots of questions about it. And be sure to tune in Wednesday for Romulus coming on stream to give his thoughts on the FOMC Federal Reserve meeting. Also, be sure to vote in the poll. What do you think the Federal Reserve is going to raise interest rates by on Wednesday? 25 basis points? 50 basis points? I think 75 basis points, at least if they're going to do the right thing, or 100 basis points, a full 1% rate hike. Be sure to vote. Thanks for tuning in. See ya.